A moving average is a technical indicator that smooths price data to show the underlying trend. Instead of focusing on every tick, it averages prices over a set number of periods, which helps reduce noise and highlight direction. Moving averages smooth out price data, but the behavior changes significantly depending on the type and how traders apply them. Here's a deeper breakdown of each section. Simple moving average, SMA. The SMA calculates the average closing price over a fixed number of periods. Every price in the calculation has equal weight. Because of that, it reacts slowly to sudden price moves. This lag is actually useful for filtering out noise. For example, a 50-period SMA on a 1-minute chart reflects the average of the last 50 minutes. If price stays consistently above that line, it suggests sustained buying pressure rather than a quick spike. Strengths: good for identifying overall trend direction, reduces whipsaws during choppy markets, works well for higher timeframe bias. Weaknesses: late entry signals, slow to react during reversals. Common SMA usage: 20 SMA, short-term trend; 50 SMA, medium trend; 200 SMA, major institutional level. The 200 SMA is often watched by large funds. When price approaches it, reactions tend to be stronger. Exponential moving average, EMA. The EMA gives more weight to recent prices, which makes it more sensitive to current momentum. This is why intraday traders prefer it. A 9 EMA will turn quickly when momentum shifts, helping traders spot early continuation or reversal signals. Strengths: faster reaction to price movement, better for entry timing, works well in trending markets. Weaknesses: more false signals in choppy conditions, can overreact to temporary spikes. Common EMA usage: 9 EMA, very short-term momentum; 20 EMA, pullback area; 50 EMA, trend confirmation. When the 9 EMA stays above the 20 EMA and both slope upward, it often indicates strong trend continuation. Weighted moving average, WMA. The WMA assigns a linear weighting to prices, with the most recent data having the highest weight. It reacts faster than SMA but differently than EMA. Some traders prefer it because it responds smoothly without the sharp turns EMAs sometimes create. Strengths: balanced responsiveness, smooth curve with less sudden shifts, useful for scalping setups. Weaknesses: less commonly used, fewer shared signals with other traders, can still produce noise on low time frames. WMAs are more niche but effective for traders who want responsiveness without excessive volatility in the line. Trend direction. Moving averages help define trend objectively. Instead of guessing, traders look at price location relative to the average, slope of the average, relationship between multiple averages. Strong uptrend characteristics: price above moving averages, averages stacked, 9 above 20, 20 above 50, averages sloping upward. Strong downtrend characteristics: price below moving averages, averages stacked downward, downward slope. Flat moving averages usually signal consolidation and lower quality setups. Dynamic support and resistance. Moving averages often act as dynamic support or resistance because traders anticipate reactions at these levels. In a strong uptrend, price may pull back to the 9 or 20 EMA, bounce, and continue higher. In a weaker trend, price might drop deeper to the 50. Typical behavior: strong trend, bounce at 9 EMA; normal trend, bounce at 20 EMA; weak trend, bounce at 50. Trend breakdown: price closes below all con. The more times price respects a moving average, the stronger that level becomes. Crossovers. Crossovers measure momentum shifts. A short moving average crossing above a longer one suggests buyers are gaining control. Common crossover signals: 9 EMA crossing above 20 EMA, short-term momentum entry; 20 crossing above 50, trend strengthening; 50 crossing above 200, long-term bullish shift. However, crossovers work best in trending markets. In sideways markets, they create false signals, often called whipsaws. Common setups explained: 9 EMA and 20 EMA, used for fast intraday trading. The 9 tracks immediate momentum, while the 20 shows pullback depth. Traders often enter when price pulls back to the 9 or 20 and resumes trend. 20 SMA acts as a short-term baseline. If price keeps reclaiming the 20, buyers remain in control. 50 SMA represents intermediate trend. Breaks above or below often signal stronger directional moves. 200 SMA, major institutional level. Many algorithms react here. Breaks can trigger large trend shifts, short versus long periods. Short periods, 5, 9, 10, fast signals, more noise, better for scalping. Medium periods, 20, 21, 34, balanced signals, good for day trading. Long periods, 50, 100, 200, reliable trend, slow entries, stronger support resistance. Day trading combination logic, a practical workflow. Use 50 or 200 for overall bias. Use 20 EMA for pullback area. Use 9 EMA for entry timing. Confirm with volume. Example, if price is above the 50, pulls back to the 20, holds above the 9, and volume increases, that suggests continuation. This layered approach reduces false entries and aligns multiple signals in the same direction. Moving averages work best when paired with indicators that measure momentum, volume, or overbought, oversold conditions. The moving average shows trend, and the companion indicator helps confirm whether that trend is strong enough to trade. RSI, Relative Strength Index. RSI pairs well with both SMA and EMA because it measures momentum strength during pullbacks. A common setup is using a 20 EMA for trend direction and RSI for entry timing. If price is above the 20 EMA and RSI pulls back near 40.50, then turns up. That often signals continuation rather than reversal. This helps avoid chasing extended moves. Why it works. Moving average shows trend, RSI shows momentum reset. Together they filter weak pullbacks. Best use, trending markets where price repeatedly pulls back to the moving average. MACD, moving average convergence divergence. MACD is actually built from EMAs, so it naturally complements moving averages. Traders often use a 50 SMA or 200 SMA for overall trend, then use MACD crossovers for entry confirmation. When MACD crosses bullish while price is above a rising moving average, the probability of continuation improves. Why it works. Both measure trend in different ways. MACD confirms momentum acceleration, reduces false breakouts. Best use. Swing trades and intraday trend continuation. VWAP, Volume Weighted Average Price. VWAP is one of the strongest companions for moving averages in day trading. If price is above VWAP and also above the 9 and 20 EMA, that alignment shows strong institutional buying pressure. Many traders wait for pullbacks to the EMA while VWAP holds as support. Why it works. Moving averages track trend. VWAP tracks institutional positioning. Confluence strengthens support levels. Best use, intraday trending stocks with high volume. Volume is simple but extremely powerful with moving averages. A bounce off a 20 EMA with rising volume is much more reliable than a bounce with low volume. Volume confirms whether traders are actually participating at that level. Why it works. Moving averages show where price might react. Volume confirms real interest, helps avoid fake breakouts. Best use. Breakouts above 50 SMA or EMA. Bollinger Bands use a moving average internally, so they naturally complement SMA setups. Traders often watch for price riding the upper band while staying above the 20 SMA. Pullbacks to the middle band, which is the SMA, often act as continuation entries. Why it works. Bands show volatility expansion. SMA shows trend baseline. Helps identify trend versus range. Best use. Volatility expansion trades. Stochastic oscillator. Stochastic works similarly to RSI but is faster. In strong trends above a 20 EMA, traders wait for stochastic to reset to oversold, then turn upward for entries. This helps catch quick continuation moves. Why it works. Fast momentum reset indicator. EMA defines trend direction. Good for scalping. Best use, lower time frame trading like 1 minute or 5 minute charts. Best combinations, practical, for day trading. 9 EMA plus 20 EMA, VWAP plus volume. This gives trend, pullback zone, institutional level, and confirmation. For cleaner setups, 20 EMS RSI, simple and effective for continuation trades. For swing trading, 50 SM plus MD helps capture larger trend moves. For volatility trading, 20 SMA plus Bollinger Bands, useful for expansion after consolidation. The key idea is not stacking too many indicators. One trend indicator, moving average, plus one confirmation indicator usually produces clearer signals. When you combine moving averages with confirmation indicators, the most effective strategies are those that align trend plus momentum plus confirmation. Below are several practical strategies built specifically around those pairings. EMA pullback continuation, 9 EMA plus 20 EMA plus RSI. This is one of the cleanest intraday trend strategies. First, identify a trend where the 9 EMA is above the 20 EMA and both slope upward. Wait for price to pull back toward the 9 or 20 EMA. At the same time, RSI should cool off toward the mid-range, around 40 to 50 in an uptrend. The entry happens when price holds the EMA and RSI turns back upward. The logic is that the trend remains intact while momentum resets, allowing continuation. Entry concept: price above both EMAs, pullback holds, RSI turns up. Exit concept: previous high or when price closes below the 20 EMA. This works best in strong trending stocks with steady volume. Trend alignment strategy: 50 SMA plus MACD. Use the 50 SMA as the directional filter. Only take long trades when price is above the 50 SMA and it is sloping upward. Then wait for MACD to cross bullish or for the histogram to turn positive. This avoids early entries and confirms that momentum is building in the same direction as the trend. Entry concept: price above rising 50 SMA, MACD bullish crossover. Exit concept: MACD momentum weakens or price loses the SMA. This works well for both intraday and swing trading. VWAP plus EMA trend continuation. This strategy focuses on institutional bias. If price is above VWAP and the 9 EMA is above the 20 EMA, the trend is considered strong. Wait for pullbacks to the 9 or 20 EMA while VWAP remains below price. Enter when price bounces and volume increases. This setup shows alignment between short-term momentum and institutional positioning. Entry concept: price above VWAP, pullback to EMA, volume expansion. Exit concept: loss of VWAP or break below 20 EMA. This is very effective for high dollar volume day trades. Volume breakout strategy: 20 EMA plus volume. In consolidation, price often compresses around the 20 EMA. When price breaks above the consolidation with strong volume and holds above the 20 EMA, it often starts a trend move. The moving average acts as a baseline while volume confirms participation. Entry concept: break above range with volume, price holds above 20 EMA. Exit concept: volume fades and price closes below 20 EMA. This is useful for morning breakouts. Bollinger Band trend ride: 20 SMA plus Bollinger Bands. When price breaks above the upper band and continues riding it while staying above the 20 SMA, it indicates strong momentum. Traders enter on small pullbacks to the middle band, the 20 SMA, during the trend. Entry concept: strong push above upper band, pullback to middle band hold. Exit concept: price closes below middle band. This works best in volatility expansion phases. Scalping reset strategy: 9 EMA plus stochastic. Use the 9 EMA for trend direction. If price is above the 9 EMA and trending, wait for stochastic to drop into oversold. When stochastic turns upward and price holds the EMA, enter for a quick continuation move. Entry concept: price above 9 EMA, stochastic oversold turning up. Exit concept: quick momentum stall or previous high. This is best for 1-minute or 2-minute charts. The most consistent overall approach is trend filter, moving average, pullback, momentum reset, volume confirmation, continuation. This structure keeps trades aligned with direction and reduces chasing extended moves. Time frame choice matters because moving averages behave differently depending on speed of price movement. Faster strategies need lower time frames, while confirmation-based strategies work better slightly higher. EMA pullback continuation: 9 EMA plus 20 EMA plus RSI. Best time frames: 1-minute, 2-minute, and 5-minute charts. The 1-minute gives earlier entries but more noise. The 2-minute often balances signal quality and speed. The 5-minute is slower but more reliable, especially after the first 30 minutes of market open. Many traders use the 5-minute for trend direction and the 1-minute for entry timing. Trend alignment: 50 SMA plus MACD. Best time frames: 5-minute, 15-minute, and 1 hour. This strategy relies on sustained momentum, so slightly higher time frames work better. The 5-minute is good for intraday swings, the 15-minute filters noise, and the 1 hour is useful for holding longer moves throughout the day. VWAP plus EMA continuation: best time frames: 1-minute and 5-minute. VWAP resets daily, so it's designed for intraday use. The 1-minute helps identify quick pullbacks to the 9 EMA. The 5-minute confirms whether the trend is stable. A common approach is watching VWAP on the 5-minute while entering on the 1-minute. Volume breakout: 20 EMA plus volume. Best time frames: 1-minute, 3-minute, and 5-minute. Breakouts happen quickly, so lower time frames capture them earlier. The 3-minute is often overlooked but useful because it smooths noise better than the 1-minute while staying responsive. Bollinger Band Trend Ride, 20 SMA plus bands. Best time frames, 5-minute and 15-minute. This strategy benefits from cleaner trends which are easier to see on slightly higher time frames. The 15-minute reduces fake volatility spikes, scalping reset, 9 EMA plus stochastic. Best time frames, 1-minute and 2-minute. This is a fast strategy. The signals appear frequently, but discipline is needed to avoid overtrading. The 2-minute reduces whipsaws. General guideline, 1-minute, fastest entries, highest noise. 2-minute, balanced scalping time frame. 3-minute, smooth but still quick. 5-minute, best overall for day trading. 15-minute, stronger trend confirmation. 1 hour, intraday bias and larger moves among. A practical workflow. Use 5-minute for trend direction, then drop to 1-minute or 2-minute for entry. This keeps you aligned with the bigger move while still getting precise entries.